Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Returning guest on the program with us today is David Skarica. He is the editor and publisher of addictedtoprofits.net. David, welcome back to the program.
I'm good. Thanks for having me.
Excellent. Well, this is a interesting week for anybody associated to gold or the commodities. It looks like the U.S. dollar index has just broken below that 90 point. And if you look at a chart, in fact, you sent me one in an email before this interview, and I'm going to try to post it. It really looks like a bearish case for the dollar, and maybe finally the time for commodities to shine. What do you think?
Well, yeah. Well, what's interesting about the dollar rolling over is really two things. First of all, I think that lower low, that breaking support you talked about, is really important. Because if you go look at the last two major declines in the dollar, and this would have been in the 80s and in the early 2000s, if you break kind of like the lower low after this topping pattern, it almost continues to go down for years and years and years. Like if you look at that 2000 to 2002 period when the dollar topped, as soon as it broke, the support at that time was about 109 on the dollar index. That was it. It made a lower low, and it kept going really all the way down to 2008 when it went to 71. And if you look at the 1980s, actually there wasn't the bounces were very weak, but the support then would have been around 140 on the dollar index. It topped at 165, and then it kept really going straight down till in 1987 to about 85. And I think that's another interesting kind of similarity now that we're seeing this big huge move in the stock market. And one of the things that kind of broke the back of the market in 87 was at first the dollar's decline was positive because they didn't sell as much to overseas countries at that point, U.S. multinationals, but they still had a percentage of their sales overseas. So that helped those overseas sales, et cetera, et cetera. But then finally it was like to the point where the dollar just went down too much, and it was kind of like inflationary or stagflationary. So we could also see that as well, where who knows how high the stock market can go, but maybe in the short run, after a short kind of term pullback in the market, maybe this lower dollar helps profits, helps companies. But if it goes too low, you start importing inflation, and you kind of have that stagflationary trade happening, and that could ultimately hurt the stock market, which brings us to the other chart I have, which is gold. And I really, really love the chart of gold. Now, it's been a long time coming for us gold bulls. But if we go look at the chart of gold, the last time we saw a chart like this, meaning like a 3 to 4 year base, was kind of in the 1998 to 2002 period, when gold was basing between 250 and roughly 350. And when it broke above that in late 2002, it kept going up all the way really into 2012 without a major multi-year decline to almost 2,000 an ounce. So now we've got another 4 year base here between 1,000 and about 1,350 to 1,400, and we're over 1,350 today. And I really think if we can break that 1,375 to 1,380 area, look, when you have a 4 year base like this, there's a simple term in technical speak. It says the longer the base, the more the space. So if you get a big base like that lasts for years and years and years, in all probability, the move up isn't just going to be 6 months. It's going to be 3, 4, 5, maybe 6, 7 years. It could really be that long. Obviously, there'll be pullbacks along the way, but really, this should be the start of a major run similar to 2002 to 2008 or 2002 to 2012.
David, looking at gold and with this basing pattern having gone on for so long, where can gold go in terms of this year and next year? Like how fast, how high up can it go?
Well, I think that if you go look at the last time we were really in a secular bull market for gold, which was the 70s, this decline is kind of like the 74 to 76 decline. And actually, what's interesting about it is you just take the numbers back then and times them by 10. That's kind of what's happening. Then it went from 35 to 200, then down to 100. This time we went from, like I said, 350 to almost 2,000, and then down to 1,000. And when it broke the short-term resistance level in about 77, 78, gold blasted off to 800 an ounce. And I'm not going to say it's going to go to 8,000, but What I'm saying is, but the interesting thing was that when gold broke the kind of short-term resistance in 76, 77, it went back to that $200 an ounce pretty fast, basically by the end of by mid-1977, within a year of the bottom. So I don't know, you could almost, it may be realistic to say, but sometime next year, we could be pushing up against those 2011 highs. But I would say, realistically, if we do break this, 1375 to 1400 area within the next couple months, I don't see by the summer you can't be at 15 or 1600, because that will be a massive breakout. And I think what's really interesting is the gold stocks are really lagging. Okay, now some people would say that's negative. I don't see that as negative. I think that market has changed in that with the advent of ETFs, we're seeing outflows of the GDX and GDXJ ETFs, even with the gold stocks going higher. And that's because you've got this bubble in the stock market, you've got the cryptocurrencies going parabolic, and I just think that people aren't interested in gold stocks because other things are hot, right? So I think that's the only reason they're lagging. And then we've seen really no movement in the juniors. And in 2016, when gold went, from, that 1,050 bottom to over 1,300, we saw that a lot of these juniors explode up 300, 400, 500%. But this time around, this move to over 1,350, they haven't moved at all. So I think you've got some excellent opportunities in juniors that are, say, expanding resources, have had good drill results, are in small-scale production with expansion in that production. I think those can really, really see leverage increases in their market capitalizations if gold goes to that 1,500-1,600 area.
David, looking at asset classes around the world, like the Dow, which is breaking new highs on a daily basis, real estate back above '07 levels. You can even point to things like Bitcoin. It seems like inflation is rearing its head everywhere except commodities, and that goes against what one might think is gold is supposed to be a leading indicator of inflation, and yet it's kind of the last thing that's moving. Am I right in pointing this out?
Yeah, I think that's totally the case, and I think what we've seen here is since 2013, even though we've had this big asset bubble going on in anything from real estate, like you mentioned, and not just U.S. real estate. You got places like Canada and Australia have gone way above their 2007 highs in terms of the price of real estate in those countries. So from real estate to cryptocurrencies to obviously stock markets around the world. But the gold and commodities have lagged. Now, part of the reason was in 2014 and 2015, we saw a big rise in the U.S. dollar, and they tend to trade inversely to that. But I think part of it is we're almost seeing gold again become like a safe haven asset. And when everything was going great from 2013 to 2018, people saw no need to be in precious metals, even if we're seeing inflationary asset price moves around the world, because everything seems stable, stock markets are booming. And I find that as a positive, because my feeling is I want to see a 70s type trade show up where, where we see, and it's kind of happened in the early 2000s as well, where we see gold kind of go up inversely to the rest of asset classes, and it's trading more as a traditional hedge rather than trading with markets, et cetera, et cetera. Of course, in a hyperinflationary scenario, all assets go up together. But in kind of a bear market stagflationary scenario, if the dollar continues to see its downward move, we could continue to see these commodity prices move higher and gold move higher. And I think, by the way, that could be really interesting is, okay, gold is seen as a hedge, but what happens if we continue to see increases in other metals, et cetera, even with markets moving lower, et cetera? That could mean that, again, we're seeing kind of a stagflationary trade. Now, I don't see the really strong stagflationary trade happening till after some kind of stock market decline, because then I think you get more QE. But every time they print money, it goes into different things. Like in the 2000s, it mainly went into real estate. This cycle, we went into everything, but it was mainly going into stocks and bonds. And I think the next cycle will be it won't go into stocks and bonds. The reason being is I see the corporate bond market as being the key debt bubble market that's going to blow in this downturn. So they won't be able to reinflate that bubble. So now it will go into real assets. But anyhow, I'm happy that I think that gold now is more going to move, at least potentially in a stock market correction or something worse, counter to the market.
David, you mentioned companies that are junior marginal producers. You've made the case before, pretty obvious why a rising gold price would help them. Also, I know that you're interested in large-size, low-grade assets in this type of an environment. Any companies that you're looking at right now, and it's funny how in bad markets nobody wants to pick, but as soon as things pick up, and I find it myself, I want to know what's the best, cheapest thing to buy right now. What do you like junior gold-wise?
Okay, so I can think of just like three, we both have interest in, and then another that you may not, but I have on my list as well. And just as a disclosure, these three companies are all corporate subscribers to my own website, which is just a small fee I do. And, I do some podcast interviews with them, et cetera, right? So Galani Gold, which has a small producing mine and the ability to put a larger producing mine into production as gold prices rise. Now, this stock is only trading at 5 cents right now, which is essentially where it was in 2016, before gold, gold was at like 1,100 an ounce. Wallbridge, which has had some superb drill results as of late, and the stock did have a bit of a bump, but now has moved back down to the 9 to 10 cent range. And then the other one would be Mexican Gold Corp, which has about 1 million ounce resource, is expanding on that resource, and it's had again some superb gold, some gold and silver results as of late. And also, actually, we're getting towards the resistance on Mexican. It's got some resistance in the stock at 40 cents. And I think if it can break that, it can really, really break out. And the last one would be Eurosun. They actually have they're putting a mine in production in Eastern Europe. And it's the same group that did Desert Sun years and years ago and had that taken over by Yamana. And the stock has climbed a little bit. It really spiked last year, but now it's kind of in this consolidation mode around $1 to $1.50. And I think that could really take off too if gold breaks out here.
Excellent. Well, David, finishing up, I know you wanted to put your 2 cents in on the Bitcoin craze that's been going on. Some people are pointing to this as a nascent technology that's going to be the wave of the future. Others are saying that this is a total scam, and then there's quite a few people in between. But of course, Bitcoin's down from its highs quite a bit, and gold's starting to move. So looking interesting for your subscribers at this point.
Yeah, I'm kind of an in-between guy in that I love the blockchain technology. And I think it's great that the cryptocurrencies have kind of given competition to central banks in that, I think one reason that Bitcoin was invented is because it has a limited number of coins you can issue as kind of being a currency you just can't print into oblivion like the central banks do with their own currencies. So Nassim Taleb, the Black Swan guy, recently said that this is kind of the inception point of a private alternative to central banks. So governments around the world are going to have to adhere at some point. But I do think the price action is indicative of a classic bubble. It reminds me a lot. I'm old enough to have been around during the dot-com bubble. Stocks becoming blockchain stocks, going up hundreds of % on that news. The kind of mania around it. A lot of these ICOs remind me of the dot-com IPOs of that time, 95% of which went to zero. So I think ultimately that's where a lot of these will be headed. Whether Bitcoin goes to 50,000 or has topped already, it will probably end up going down 80 to 90% in the bubble type decline, and probably will be a buy at that level after that. But anyhow, in terms of the actual price action, I study all these bubbles, and when stocks or currencies or whatever commodities go parabolic, they always have the same move. They blow off. They have an initial decline, they have a rebound, and then they crash. And that crash can be anywhere from 30 to 40% to as much as 70 to 80% off their highs. Like, for example, in 1980, gold crashed about 45% from its highs in the first 3 months of 1980, where silver crashed 75% from its highs. Part of the reason silver was manipulated. But anyhow, the pattern is the same. So here's what's really interesting. That crash almost always happens 2 to 3 months after the initial high. So gold in 1980 peaked in mid-January, and the crash happened in early to mid-March. Stocks in 1929 peaked in early September. They crashed at the end of October. Stocks in 87 peaked at the end of August. They crashed in the middle of October. So I would think that if Bitcoin is going to see this initial crash, because it's so parabolic, I think that initial crash in Bitcoin will be 70 to 80 or 60 to 70%. It would probably have to happen somewhere in the mid-February to late February timeframe. So basically within the next month, and by end of March at the latest. So I would think that if it holds around 10 to 11,000, for the next month or two, it's probably just a base, and you're going to see another move higher. But if it breaks that 10,000 and the 9,200 print low of a week or so ago, it's probably seen in the initial move in a crash. It's probably will go down to 5,000 to 6,000 on this move, maybe bounce from there and then roll over again. So I'm sorry I can't give you an ultimate, no one has a crystal ball, an ultimate easy answer, but that would be my opinion, that if you're a Bitcoin bull, if you wanted to take some money off the table because you made money in it, you probably could wait to the end of March. And by then, if it hasn't crashed, it's probably a base. And if it does crash, you can at least probably get a good trade in it. But I'd be wary. I would think that would just be a trade, and it's probably the start of a multi-year decline like the dot-com bust. And look, like I said, in the long term, it can't mean it can't go higher. Amazon went from 110 to 5, and now it's 1,300. So it doesn't mean that some of these things won't work out ultimately, but this kind of speculative mania, when you've got people throwing money around, these crazy Bitcoin cruises with 600 people paying obscene amounts of money to be on the cruise, that is usually the sign of some kind of mania and big top that's going to happen.
Okay, well, David, thank you so much for coming back on the program. Excited to see gold breaking out of this base pattern, and hopefully we reach some new highs sometime in 2019 or maybe even before. Once again, David is the publisher of addictedtoprofits.net. David, we'll get you back here soon.
Yeah, thanks for having me.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?